Hi and welcome to This Week in Audit. My name is Dr. Amanda White and it is Tuesday the 25th of October 2022 and I have 3 fantastic stories for you this week and 1 recommendation if you're really interested in keeping up to date on audit news and current events. For those who don't know me, hi, my name is Amanda. I do love to audit and I teach accounting to undergrads at a major Australian university. Before that, which I've just done this year, I taught auditing for almost maybe 15 years, more than that, to both undergraduates and postgraduates. And of course, you can catch all of my study materials related to audit on amandalovestooaudit.com in the study guide, and that's also linked in the description below and at the end of the video. So if you're trying to figure out, what are the best study resources, everything I've got is up there and available for you to access. And where I've got full lectures, there's also slides as well for you to be able to download those files and take notes along with the materials that I've got. So, story number 1, this one comes from a little while ago, but you may not have seen it, and that is Deloitte was fined $20 million by the SEC, and this is Deloitte's affiliate in China. So there's the main Deloitte branch, and then in China, there are the Big Four, plus a whole range of other firms that conduct audits on international companies that may have operations in China. Of course, this is part of, as I've covered in a previous episode, requirements for listing in the United States is that your overseas affiliates must also comply with PCAOB audit inspections. So this is China Deloitte, and it says here that they are fined $20 million for asking their audit clients to conduct their own audit work. It's sort of like saying to students, hey, write, complete, and mark your own exam. What are the issues that are associated and the auditing standards? Now, of course, I'm going to talk about this from an international standards perspective. The standards are pretty aligned, but in this instance, the PCAOB would have been investigating using the US standards. But since I know that there are a lot of people out there who are following international standards, the ISAs, I'm going to sort of analyze it from that perspective. So the first part is that they failed independence requirements. Just like your teachers are there to independently verify that you understand the work in auditing, we are supposed to be there as the auditors to independently verify management's assertions about the financial statements. So asking the clients to prepare their own work and their own conclusions definitely is not independent. If I asked any business, are you telling the truth? Of course we are. So there's issues around independence. The clients selected their own samples for their audit testing. That breaches ISA 500 around audit evidence and collecting of audit evidence, and also the ISA related to sampling, which from memory is ISA 530. So all sorts of issues in asking them to collect their own samples. We haven't independently gathered evidence. Then they prepared their own working papers. This is really interesting because typically working papers are prepared electronically within firm-wide software. So we don't know whether these were paper working papers or electronic within the system or just, Word documents and Excel that the Chinese Deloitte affiliate just added into the file. But they were asked to prepare their own working papers, which certainly is not what is instructed in ISA 230 around audit documentation. Now you might think, well, hang on a second, Amanda, ISA 610 does allow in certain circumstances, though not in Australia, but in most of the rest of the world, for auditors to be able to use the work of internal auditors, where internal auditors are instructed and supervised by the audit team. Unfortunately, that doesn't apply here because there was no specific instruction and oversight. It was just, hey, go off and do the work that we asked you to do, prepare it yourself, and then we'll just incorporate it into the file. So specifically, we've talked about the standards that were breached. If you look at the, and you can look at the announcement, I'll put the link in the description to the video. It says that the audit finds that the misconduct involved both junior and senior audit team members and reflected a lack of audit supervision by audit partners. And so when this comes from the SEC order, this also tells us that there are some significant issues around audit firm quality management. Now, we know that there's brand new international ISQM, so the International Standard on Quality Management has come into play. And, there is supposed to be supervision and checking throughout this whole process of the audit. The work of juniors is checked by senior auditors. The work of senior auditors is checked by managers. The work of managers is checked by directors and partners. The work of partners is checked by a second review partner to make sure that we've got all of those levels of review. So the question becomes, especially for those people who are out there who are auditors, what do you do if you find yourself in this situation where the firm that you're working for instructs you to do something that you know is against the rules when it comes to audit regulations, international standards, government standards? There's a couple of things. So if your boss or your partner, manager tells you to do this, then the first thing that you do is you say, are you sure? I don't think this is what the auditing standards require us to do, or this is not firm policy. So you take it directly to the person that asked you. If they say, yes, okay, this is definitely what you do moving forward. If you feel comfortable, then you go to the person, above that, the manager, for example, or the partner who asked you. If the partner asked you to do something that is against the rules, then you would go to the second review partner or the review partner on the engagement to raise your issues with them. If they're still telling you, look, I don't think this is a problem, there might be some sort of internal quality management group that you might talk to, or you go to your regulator or your professional association for advice. This might have happened, and we don't have a lot of detail here. Junior people might have just followed the instructions and thought, oh, I don't want to speak out. I don't want to lose my job. I need to keep my job, or maybe I don't know something. But this is where you can ask questions. Oh, this doesn't seem like in line with the auditing standard on audit sampling, or I think this is against the policy. Can you show me where this is okay, and put it back on that person to prove to you that what they're asking you to do is correct and was within your firm's methodology and the rules and regulations of your jurisdiction. Standing up as an auditor is really, really important. And if you're watching this as an accountant, whistleblowing or making the board or the audit committee aware of these issues is really, really critical. I'd be really keen to see how much the audit committee knew about what was going on here in this particular instance, if we ever find out more information about this case. Now, the second story I have this week is about revenue recognition and manipulation at VMware. So they're a software company, they sell licenses, and you get a little key to go with that particular license. And what they were doing is, when they were going through troubled times financially, to try and smooth out revenue, they were delaying in sending the software keys to customers until the next quarter. So that they could record that revenue in that next period rather than in the current period, to make things probably, look a little bit smoother and make things look a little bit more optimistic for the future. So what is the accounting issue here? We know that we see an attempt to delay revenue recognition. So they successfully delayed revenue recognition, but we know that creates issues from an accounting perspective. If you think about the revenue recognition principle, your accounting standards, you're not supposed to delay revenue. When you incur the expenses, you recognize the revenue under the matching principle. So how should the auditor have detected this? And why didn't the auditor detect it before? Or maybe the auditor did detect and raised it with the SEC. It's not quite clear from the article. But how should the auditor have detected this? They should have detected it while testing the occurrence, and let me just see if I can get my pen working here. The occurrence and the cutoff assertions for sales. So remember, we have to make sure that our sales occurred, are completely recorded accurately in the correct period using the correct accounts under classification. So this is definitely here a cutoff issue. The sale occurred in the incorrect point in time compared to the recording. Okay, so how do you detect this as an auditor? Number one, this is really important where ISA 315 comes into play, that understanding the business is really, really critical. If you don't understand the business and the accounting systems and the controls, then you're never going to be able to detect that you've experienced an issue like this at your client. So this could occur because of shipping delays. So you ship goods to the customer 2 days before the end of the financial year. If they don't receive it by the end of the financial year, you've got a cutoff issue where again, you could have the same types of problems. Now, my third story for today is one that's just come out just recently, is that Asic, which is the Aussie regulator, has a brand new report. Now, we know in the audit world that ISQM, the International Standards and Quality Management, and there's a number of standards, and the Australian standards, are about to come into force. International standards have been around for a couple of years now. Now, one of the things that the quality management standards require is that if you've had failures in your audit or deficiencies or problems associated with your audit picked up by regulation, then you have to do something, or they recommend doing something called root cause analysis. And that's really like, what is the problem? Let's get to the root cause of the audit problem so that we can try and fix that issue, improve the procedure, change the audit methodology, improve the documentation or the software to make sure that it doesn't happen again. It's all about lessons learned. So they've done this report. All of the major firms dug into their root causes, prepared reports for Asic. They've done sort of a meta-analysis and then provided their report. So what exactly does this mean? Root cause analysis, as I just mentioned, is digging into why did this happen? How can we prevent it from happening now or the next time? Firms are doing it because they want to improve audit quality, right? This is all about improving audit quality because we know that, auditors don't get the best rap in the market. There's sometimes perceptions around low audit quality. So firms are doing it to try and improve their audit quality because, of course, if they can improve their audit quality and they can prove it, the other option is that they can increase their revenues or their fees by charging people more, by saying, hey, we're really high quality, so this is why you should definitely consider using us, and here's why our fee is higher. So there are reasons firms are doing it. Is this report about identifying and discussing what the root causes are of the firms? Unfortunately, it's not. So it doesn't say, oh, look, firm A, this was the cause of their problems. Firm B, this is the cause of their problems. Instead, it's more that we're looking at the methodology of how the firms do their root cause analysis. Are they covering and interviewing enough people? Are they looking at enough audit documentation and the process of root cause? So it's not really identifying what the problems are at specific firms, instead just the process. So I was all excited at first thinking, oh, are we going to look into the actual root causes? But in looking at it in a bit more detail, it's more about process than about those actual root causes. But we'll be interested to see what the next audit inspection report says about what issues they found and maybe what firms are saying about how they're trying to improve that situation. Now, to wrap up this week, I have a recommendation. So I want to try and expand besides, subscribing to me, and I really do appreciate it. If you haven't yet, consider subscribing for audit news and information, is Going Concern. It's a website. You just go to goingconcern.com. I follow Going Concern on Twitter for all the latest news related to auditing. Sometimes I get my story ideas from Going Concern as well. So I pick certain things that I think are going to be interesting to students and to people studying for their qualification process. So if you have a recommendation that you'd like me to feature on a future show, I've got a great fraud podcast to talk about next time. Drop it in the comments. I'd love to hear about it. So I hope everybody is doing well. Let me know what you think about the stories this week around Deloitte China, their US affiliate, telling people, the clients, do your own work, around revenue recognition or around quality. Around the quality management standard. Of course, if you have any stories that you see, you think, oh, Amanda, I'd love for this to be on the show, you can always get in touch with me on social media through Instagram is probably the easiest way, at Amanda Loves to Audit. I hope everybody is staying safe, doing well, and I'll see you next time. Bye!